Good morning, Fractal Effects team. Please make sure you read the disclosure. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. About 4 minutes until New York Open. We'll jump onto the charts. So last night we took all-time highs on NAS. We have a upside expansion model with the spotlight. We're green across the board. And there's a 4-hour fair value gap down here. So we're going to do one of two things. We're either going to run this 4-hour fair value gap first, and then look for a possible buy-in, or we're going to sweep. The manipulation move is going to be to the upside first and sweeping out all these highs and then push down. So we're going to just see where the manipulation move falls. But right now our bias is bullish. So remember, the indicator paints out the manipulation range for you. I just have all-time highs marked out right here, which is just above the manipulation range. Big drop right now with 3 minutes to go before open. $238 EMA right here, 4-hour fair value gap. And remember, the manipulation range will adjust on its own. So that was the low, now it's moved. And we'll draw it out on its own, most likely after this candle's finished. So the fact that we've taken or filled in this inefficiency and left these relative equal highs here, that falls in suit with what we're looking for. Again, we're going to see which side of that manipulation range is taken first. Most likely it will be the low of it. There's your end dog, which is your new day opening gap, that aqua line. It only looks like a line because the gap between previous day close and current day open was very small. Usually it's a box like this. That's the new week opening gap. There's the new day opening gap, the aqua. Keep in mind, you can turn these on or off. It becomes a little too much for you in the settings. So we got 24 seconds left till open. One. Massive blue zone painted out. And there's your new manipulation range right there at the bottom of this candle. Let's see if we take this candle, or if we just shoot up from here. Just gonna, right there, we just took it. Just gonna zoom in, right there, that green line. So now we've manipulated to the downside. We've filled in this inefficiency. We have upside expansion model as mentioned before. So right now we're going to look for a 5M green fair value gap. That's our primary focus. We're just going to patiently watch that form. So the market's going to run back up here though. So to the midpoint of the blue zone. We'll paint out the midpoint. Might as well make that blue as well. So now we've hit the end dog. Continuing to, so it's slowly starting to wick off of that now. Strong, strong wick there now. One minute, 21 seconds left for this candle close. Remember, we're waiting for a green fair value gap to be created here on the 5M. Because until we see that, it could continue dropping. These wicks don't mean anything. These are manipulation. Remember, this is a manipulation move in itself. So it could manipulate this way, come back in, fill in this, and continue to push down. So at 9 o'clock Eastern Standard is when I believe Trump started talking. There's a Trump speech today. He could pretty much say anything. With any other president, you know ahead of time what is going to be discussed, and you can kind of adjust for that. But with Trump, you never know what's going to come out of his mouth, so you want to proceed with caution. He could suddenly just, discuss more tariffs or anything that might affect the market. So again, there's our big wick. Now we're just looking for a 5M fair value gap to be created here. Fair value gap's not even on the 1M right now here. But that's the beauty of the blue zone strategy. We quickly assess. As mentioned before, we have a buy model sitting on top of a upside expansion model for the spotlight strategy. We have both indicators working at the same time. We just swept out the lows, filled in this inefficiency. So we manipulated down. Now usually you want the manipulation move to match the model. It's that simple. So if our bias is bullish, then we want the market to manipulate down. That's our fake move. And then we take the first buy that's presented. We're under the 238 EMA right now, so let's see. Let's see what kind of a setup it gives us. The only time you ever want to go against, excuse me, the only time you ever want to go against the manipulation move, and even that you can only do for a short time, is if you break twice to the manipulation side. What do I mean by that? So once we have the break on the 5M, as you can see right there, there was the green line. Once you break, if you have a pullback at any point, a green candle that takes out any one of these candles' highs, and then it drops again and takes out the low, that's a second break. Then you're either out of the market or your bias changes. I like to just step out. I don't want to change my bias. I'm not going to short an aggressively bullish market. So what we want to see is a green fair value gap be formed before that happens, before we see any kind of a pullback. Right now there's no pullback. This is one leg. Remember, how do you measure a leg? You never see any pullback. The next candle does not break the previous candle's high, wick. This is a big candle, nothing broke it. This candle did not take this candle's wick. And we got 1 minute 36 seconds left. But as simple as that. Now, as soon as we do get a green fair value gap, hopefully it is around here, then our bias is any one of these points. You can ride it all the way to the midpoint of the blue zone, or you can ride it all the way to the other green line. Usually we manipulate to one side and then we sweep the other. Now we got equal relative highs up here as well. This point, this point, this point. Everything else has been swept out. There's the new week opening gap right here. So there's the new day opening gap, N dog, and new week opening gap, N wog. And you can change the colors of these to whatever you like. Let me change that to orange actually, so it's a little easier to see. And you can turn them off too if you find them distracting or you just want to write down what those levels are. But everything's, yeah, now we're just looking for a green 5M fair value gap to be created, tapped, and then we'll drop down into a smaller time frame and wait for the exact same process. Green fair value gap to be created, tapped. We take that long to take out these highs. Now remember, if we have a second break though, then that market could keep dropping maybe all the way down to the N wog. There's no real news today other than Trump talking. So let's see what kind of a setup we get. Here on US 30, we have a similar setup. We manipulated down. We got our first green candle, but no fair value gap yet. Excuse me. Well below all the EMAs. red right here. The EMAs for the blue zone strategy, we use them to help us figure out where we're sitting, but they can easily just be ran right through. Because once you have the manipulation move and you know which side that's to, even if they're all red and we have a buy model, we still have a bullish bias. So the EMAs are more useful during the spotlight strategy, which we have running in the background. Another thing that lets us know that we are most likely going to push up. Let's drop in a Fibonacci real quick. Again, you can be patient here. Most people, they think the New York Open has to be stressful. It doesn't. Until we see a 5M green fair value gap, we're just relaxed. So let's take Asia low. Sorry, a little bit of lag time here. To London high. So we didn't run Asia lows. We're still right in that. We started wicking. We're in that 71 to 61% off this fair value gap, this 4-hour fair value gap. Remember, with the blue zone strategy, you have to mark out the 4-hour fair value gaps and any big daily fair value gaps. So what's the market doing? Remember, we're filling in inefficiencies, these big fair value gaps, or we're taking liquidity, which are these equal relative highs right now. Still no green fair value gap created, not even on the 1M. Just patiently waiting. Remember, if we get a second break, then we're no longer interested in looking for that buy. And right now, let me just zoom in. So this candle, let me see what these candles' highs are right now. They look like they're equal. So this candle's high, this is where you see the high, low. This is open, high, low, close of that candle. So you just got to hover over whichever candle you're looking at. So this one, its high is 20392. Oh, was that the right one? Sorry. Bit of lag happening here. Sorry, the high was 19342. 19342. 19342. So both these candles have equal highs. So it wasn't broken. You want it to be at least even a 0.1 pip above. So right now we're still in the same leg. So if it keeps dropping from here, I don't consider that to be a second break to the manipulation side, which is a good thing for our bullish bias. See, we don't get fooled here. Let it drop, that's fine. Until we see our green fair value gap, this market, there you go. See, this market's not ready to turn around until we see that first fair value gap. Could probably drop to the NWOG as well. But at no point has my bias changed. We've taken out Asia lows. I'm going to get rid of that Fibonacci. So if my fair value gap is created down here after we run the NWOG, the new week opening gap, as soon as we tap that, or if we tap that and we start creating a green fair value gap, then I'm only interested in riding it to the next PD array, which is either the midpoint of this 4-hour fair value gap, which has now become an inverse fair value gap since we've already ran it, or to the blue zone, just the beginning of the blue zone. I want to see if my 1 to 3 takes me up there. We also just had a crossover. So anytime we have a crossover, what's the market like to do? It likes to come back and touch the 20 EMA. This is fine. I'm okay with this. Let it drop. Does not change anything. Just a manipulation move. This is where people, again, that's why it's called that. This is where people get manipulated, right? There were people that were bullish, for example, and then the market dropped on them. Then there are people that switched and now went bearish. Remember, the markets are not only psychology, it's reverse psychology. That's how they get you. They're trying to trap you with this opening move. That's why some people don't like trading New York Open, and that's why we've created this indicator to be manipulation proof. Can't get manipulated. You can decide to sit out completely, but that's your choice. So until I see a green fair value gap, this thing can keep dropping. Doesn't matter. They didn't catch us. So we're patiently watching, waiting for a green fair value gap. We've hit the NWOG now, the new week opening gap, another strong point. And as you can see, not too many other PD arrays under here. We'll most likely get a turnaround soon. We've hit another higher time frame PD array. There's a 7-hour fair value gap that we just hit. We've taken out liquidity. We've taken out previous day's low, which I believe is sitting inside the NWOG here. Hold on, that's why I can't see it. So the indicator paints that out for you as well. It's a yellow line. Yeah, it's sitting inside the NWOG. So now we've taken out previous day's low as well. So we should get a turnaround here. If the market wants to turn around. Remember, if it just keeps dropping, it didn't catch us. That's fine. At no point was I interested in taking that sell though. So either we turn around and we find, or sorry, this thing sets us up for a bullish run, or it keeps dropping, which doesn't affect us at all. Those are the only two possibilities. There are people that watch this on the 1M, 1 minute time frame, just biting their nails. There's no point. Because even if this thing keeps dropping, you know what's got to happen is it's got to come back up and touch the 20 EMA. We could ride that up. So even if you have a double manipulation move, that's what I mean. You can either sit out completely or you can ride it. How do you ride a double manipulation move? Well, so if we have a double break to the manipulation side, now my bias changes, right? Now I'm not looking for a buy. I'm looking for a sell. So I either wait for it to retrace all the way back up to the 20 EMA and drop my Fibonacci and look for that 61%. So I take it from the manipulation high. Oops. Manipulation high to manipulation low. Roughly there. And up to 61%. And it'll usually go a little bit further. It'll touch the closest PD array to 61%, which could be this 4-hour, or again, this 20 EMA is now coming into the 4-hour fair value gap. Right now we have not had, this is still one consecutive leg. We haven't had any pullbacks. So this is still one manipulation move. This is not a double break yet. But if we, again, did have a double break, I'd wait for it to come back here, touch this 20 EMA, and drop. Or if it sets up a 4-hour fair value gap, a 5M fair value gap, you ride that back up to the 20 EMA. I could leave this actually. But yeah, nothing of interest yet. My bias has not changed yet. Still bullish. Still looking for a 5M fair value gap. Patiently. Nothing in US 30 as well. No fair value gaps created. Just a whole bunch of consolidation back and forth. So yesterday was a day off, long weekend. Usually when you have a long weekend, Tuesdays behave like Mondays. And I actually don't like to trade the Tuesdays after a long weekend. I like to just trade Wednesday, which becomes then our official Tuesday. But usually on a Tuesday, what do we say? What do we do? In a bullish market, we set the low for the week. There's a 70% chance that Tuesdays will set the low for the week. And what do I mean by low? Remember, everything in the markets is fractal. So if you look at a day candle, looks like we're slowly getting a reversal there now. So I'll try to make this quick so we don't miss anything. See, on a day candle, it's the same thing right up here. What do we have? We have an open, a high, a low, and a close. So on a full day candle, actually, sorry. Let's go to the week candle. Talk about the entire week here. So we have an open, right? We have either a high or a low. Usually the low is set on Tuesday, and it's usually the wick if you're in a bullish market. If you're in a bearish market, then Tuesday set the high for the week. So that wick right there is pretty much what we're working on. That is going to be our Tuesday. Now let's jump back. This is all covered in the Learning Hub. Make sure you watch all the videos. There we go. This is looking nice now. Now we want to see fair value gap being created. Remember, a fair value gap is a 3-candle model. This is our first candle, so it's going to take a few minutes. Then we want to see the second candle, leave the gap. What you could also get is a engulfing candle, which engulfs this completely, which is another sign that this market wants to push up. Let's see what that would look like. Because remember, it's coming back up to that 20 EMA and that 4-hour fair value gap. That's a 1.67, so there's not enough room here. So what we'd rather do is see that 5M fair value gap be created and ride it to take out these highs. So on the 1M, we do have some fair value gaps being created. Let's paint out the main one. Remember, even if you know where it's going, you still have to get a good entry. Otherwise, there's no point. So if you have a string of fair value gaps, I like to mark them all up. This candle hasn't closed yet. So I'll just mark it up to here. We got about 11 seconds left. Change that color. None of these gaps have been tapped yet. They've just been created. So left this one open as well. Remember, be patient. You got to be surgical with this. Surgeons don't rush in with their scalpels and just keep or start hacking away. They know exactly where to look. They know exactly where to cut. So even though I've marked that out, I'm still interested in a 5M fair value gap. I just want to know where that is at. That increases our probability if we have a 5M fair value gap. Because if we don't get that 5M fair value gap, as mentioned before, we could just come up. If it doesn't give us any entry, it could just tap here at the 20 and then drop again. And there are people that take these 1M fair value gaps just up to the 20. But as we just measured out, there wasn't a 1 to 3 risk to reward. If you don't see your risk to reward line up, then don't take it. I would never take a 1 to 1 just to take it. But everything's looking good now. We're just looking for an entry to take out these highs now. We've swept out all the lows. So this is our inducement. Here's another thing to paint out. So our inducement is right here. What's an inducement? It's our first pullback on the 1M. Let's change that to white. Here's another reason why I never get FOMO. Until the market has taken the inducement, it's not gonna, it could tap one of these fair value gaps, but it doesn't matter until it's taken inducement. Inducement means that it's actually completed a full pullback. And why is this the inducement? So this was the candle of interest. Anytime a candle is does not have a break to either side, it's the candle of interest. So this was the candle of interest, and this candle broke this candle high. So then this became the candle of interest. This broke its low. Now this is the candle of interest, so on, so on. And then this was the candle of interest until it was broken by this one, then this one, and then this one, and then this is all one leg. So that's the pullback on the 1M. So until this high is taken, it doesn't matter if it taps any of these fair value gaps because they're all invalid until that inducement is taken. Then these become valid fair value gaps. Which is great for us because all this time gives us more time to create that 5M fair value gap that we're interested in. So there's that inducement on the 5M. That's what it looks like. It's sitting right in the 4-hour. And again, that's not a coincidence. They want you to wonder right in this area. This is where all the big moves are going to happen. This is where people are going to get FOMO. This is where people are going to jump out of their position. Still no 5M fair value gap. We are tapping all those 1M fair value gaps right now, but again, they're not valid. So one single leg. The other reason we wait for inducement to be taken is because it could just continue dropping from here. So until that inducement is taken, that's why these are not valid fair value gaps. It could just continue to drop from here. And if it did, it didn't catch us. And if it did that, then that would be our second break, and we're no longer looking for a buy. See how that works? The strategy, first and foremost, protects you from manipulation. And that's the entire basis of the market. The market is trying to manipulate you. It's trying to trap you. And this is how we prevent being trapped. So let's see what happens. We have not taken inducement. We have not created a 5M fair value gap. And if we get a second break of this low, then our bias changes. Then I'd rather look for, like if I was going to, but as mentioned before, I'm not interested in selling this bullish market. But if I was, I'd wait for a pullback and then I'd look for a sell after it touches the 20 EMA. And it gets into the golden zone right here. I wouldn't look for a buy up into this position. I'd look for a sell from here all the way down. Let's see. Let's see if we break that low. There you go. No longer looking for a buy. Not really interested in a sell until it comes all the way back up here for a deep retracement. Expect a deep retracement too when you get a second. So second break, people can either, now again, this all depends on if it matches up with your bias. Say we did have a downside expansion model and our bias was to the downside and that was the manipulation move, then a second break actually lines up with your bias, right? So if all your session bias, your daily bias is bearish, and we manipulate down, you don't want to see that. You want to manipulate up first, take out liquidity or fill in an inefficiency, and then set up for that sell that you've been looking for. But here, if we've manipulated down twice, you either wait for a fair value gap, a 5M fair value gap in here, or you wait for a deep retracement. Low probability here. There's a 45% chance that this will continue to drop from here. And there is a 70% chance that it'll draw back up into here and then give us a proper sell setup. But again, my bias is not going to change. So we have about 27 minutes until our spotlight range is formed, and I'd rather wait for a spotlight entry. So we'll continue to just do some ticker tape reading. Same thing with US 30. It was right up against the blue zone, the NWOG, the 20 EMA, but it never really set us up for anything. And the manipulation zone, these are lined up. The indicator does the calculation for you, and it figures out these and plots out these points for you. But what it's lined up with is an inefficiency or a liquidity zone. Remember, that's the only two things that the market is doing. It's either filling in an inefficiency or it's taking out liquidity. And that's what the market, that's what the indicator sets you up for. So are we manipulating and taking out liquidity only to drop to fill in the inefficiency, or are we filling in the inefficiency first, which is the manipulation move, and then setting up to take out the liquidity? Here we filled in the inefficiency and we continue to drop. Which just lets you know there's heavy manipulation happening. A double break against your bias, I'm not comfortable with that because I don't know where it's going to end. But that's how the indicator protects us. Ideally, we want to see a 5M fair value gap, tap it to take out these highs. Now what we'll most likely get is, if we did get a 5M fair value gap, it'll only most likely ride into the Fibonacci golden zone. I mean, it could punch higher to take out these highs, but by that time we're not interested, right? I'd rather wait for the spotlight strategy, get a confirmation, retracement, and extension. And that's how we line these up. Think about how many people jumped in here. They saw that 1M. Let's drop down to the 1M real quick. They saw all these 1M fair value gaps. They tapped it. There was the NWOG. They took a buy with their lows set right here. Just swept out their lows, or swept out their, orders. Could it move back up from here? It could, but this just shows me too much manipulation. You're not going to catch me on a day where you're trying to manipulate me too much. You expect some manipulation from the market, hence the manipulation move. 2 breaks, 3 breaks, what are we even doing? Remember, our first goal is capital preservation. We're not entering positions when we know it's being heavily, heavily manipulated. And again, I assume this is because of what Trump is saying right now. We're not watching that live, so I have no idea. Does it say what time he's gonna, what time that speech concludes? Let me check. Remember to have some kind of economical calendar, be it Forex Factory or any other one that you look at every morning so you know when the news drops are to avoid them. So it just says tentative, which means so tentative, I assume. Tentative usually means like all day. I assume they put that there because Trump does like to ramble on, or the weave as he calls it, which really doesn't make any sense. I'm not sure what he's talking about or how long he's going to be talking about it for, but it clearly is not good for the market. People wait in bated breath. Okay, so now we're getting, do we even have any fair value gaps here? We have one fair value gap that's beginning to form on the 1M. So remember this inverse fair value gap, that's the one that most people, as soon as you get a break, they'll use this inverse fair value gap to go short. But again, that's low probability. And I'm not interested in selling this market. So we'll just wait, see if it gives us anything else. And then until then, we have time for the spotlight strategy to set up. Never change your bias either. Just because the market starts dropping, if all my bias is bullish, I'm not going to just suddenly, even though that's one of the things we teach is switch your bias. But what that means is no longer expect to find a buy. Doesn't mean I'm going to suddenly start looking for a sell. Just because my bias changes doesn't mean that my overall goal changes. I don't want to sell this market. This is an extremely, extremely bullish market. So what it'll most likely do is we'll go back up. Hold on. Let me fix adjust our Fibonacci here. I'm going to draw in a new Fibonacci. 1 second. Let's take it from London high, actually. A little higher, London high to where we're at right now. Yeah, so this is still the point of interest. This blue zone will most likely ride right into the blue zone, and that's where the decision will be made for either a sell or a run to take out these highs. Now, when we have this double manipulation move, which some people even call the turtle move, it doesn't mean that we can't set up for a buy. It just means that they're tricking us too much. There was too much happening here. I'd rather stay out of a market that has 2 manipulation moves. What's that mean? Because that means there could be a 3rd manipulation move. If we have one, that single leg manipulation move that sets us up with a 5M fair value gap, that's fine. They tried to trick us once, and we caught it. Remember, what's that old saying? Fool me once, shame on you. Fool me twice, shame on me. That's why I'd rather stay out of a double manipulation move. But there are people that do go short here, low probability. and then the market could draw and will most likely draw back into this zone. So some people ride that up, but I'm not interested in taking a short buy. I wanted to come all the way back up here and take out these highs. So let's see. Right now it's not giving us anything. I'm not selling this market and it hasn't set us up for a buy. So let's just patiently wait. You know, some people compare watching the markets to watching paint dry. I've said this before many times. I'd rather watch paint dry than to be biting my nails hoping the market turns back in my favor because I'm in on the wrong side of the trade. That's the last thing you want. You don't want the market against you. Right now, it didn't catch us on anything. About 19 minutes left before the spotlight range is fully formed. Now, as soon as the spotlight strategy and that range is formed, which is at 10:30 Eastern Standard Time, we focus primarily on that. Because remember, we're talking about specific 2 decades worth of aggregate data that's going to help us make that and determine that that bias. The blue zone indicator is a strategy you want to use before and going into market open. But once the dust is cleared, you want to focus on the spotlight strategy. It's running in the background here. So like, for example, right there, which we'll focus on after, but I like to use them both. Because when I use them both, it shows me that it's an upside expansion model, right? There's Asia, there's London sitting above Asia levels. Now that gives us a upside bias. Now when you have an upside bias and you have a buy model with the blue zone, those are 2 buys. I've said this before, if you really want to make it easy, all you need is 4 arrows. And all out of those 4 arrows, you want majority of them pointing in your direction. So we have an upside expansion model. We have a buy model. We have a daily candle bias. That means previous day's candle was closed above the candle before it. And we had a manipulation move to the downside, meaning the market wants to go up. Those are 4 arrows up. The only time I change the manipulation move arrow is when I get a double break. So even with that double break, we still got 3 arrows up. And then when the spotlight indicator is fully formed and we get a bullish, let's say we get a bullish confirmation, that's your 5th arrow. Majority of your arrows are pointing in one direction. That's your bias. Then you can add in more things like, for example, are we green across the board? Are we above the 50% of the range? There's 50 right there. We're below it right now. But those are your primary points of interest to determine your bias for the day. So we're still bullish. About 15 minutes for the spotlight range to be fully formed. Also keep in mind, we're trying to keep a consistent schedule here for you guys, but ideally, there are days where I can wake up and look at the charts and immediately know that, hey, this is not the kind of day I want to be trading in, or these are not the kind of conditions I want to be a part of. So we don't always have the luxury of that because we want to provide you guys with as much market analysis as we can. US 30 still dropping. Same thing with US 30, right? We had a manipulation move to the downside. There's your double break. It's even actually cleaner. So double break, left a fair value gap. People took that fair value gap. And then when they do that and there's no PD arrays under them, as mentioned before, this is low probability and not something I'm interested in. That would have to be their stop. One to three. But not for me. So we're still hovering here. Now, when you get a wick like this, market likes to, like even if we're going to turn back around, like to fill in at least 50% of the wick. So the consequence encroachment of that wick. It wants to leave as least amount of inefficiencies as it can as it moves back up in the direction that it's going. About 13 minutes left before the spotlight range is fully formed. And then we're fully concentrating on that strategy. I am waiting for a confirmation, arrow, a retracement back to the 20 EMA or any PD array that we find, and then an extension for at least maybe one standard deviation, or depending how deep in the range that retracement happens, maybe we'll just go for top range. Still nothing. About 10 minutes before our spotlight range is fully formed. Once you become a professional trader, or I should say investor, because as mentioned before, we do more than just teach you guys how to do day trading now. We cover everything in our learning hub. We show you how to find high probability stocks. We show you how to do top-down market analysis. We show you exactly what to look for if you're investing long-term. We don't give investment advice, but that's why we created, we've got time here, nothing's really setting up. That's why we've created, it's our learning hub. That's why we've created the Market Watch. Go to the Market Watch section. Oops. I gotta sign in, I guess. Anyways, go to the Market Watch section. It's right in the footer. So the Market Watch is part of our subscription plan. Like, it won't let you read past this, I believe, if I'm not mistaken. Does it give you any kind of, gives you a little bit of a setup, but then you have to log in to read. So this is for our paid users, but gives you all information on what stocks are pushing. We've hired an entire team to do this research for you. You just pick exactly what industry you're interested in investing in. You know, let's say you're interested in aerospace and defense. It's talking about Boeing. Again, these are updated on a daily basis, so you want to take a look. Let's say you're interested in energy. Not only does this go over what industry professionals are saying, we got quotes in there, specific industry analysts who are talking about specific stocks. That's not us giving any financial advice. That's right out of the mouth of the experts. And then you do your top-down market analysis to find your entry points. There you go. So if it's days like this where you're not seeing any kind of setups, you can jump right into the Market Watch, go over specific industries that you're interested in. And if you're not a paid subscriber, go to the blogs. That's free. You can find something in here as well. And again, this is updated every day as well. S&P, Smart Strategies, Goldman Sachs, what are they saying about gold? 2025 about Bitcoin. Again, experts. We went out of our way to actually sit down with experts and see what they're saying about specific AI, like about specific markets and where certain sectors might be going. So make sure you explore the website. We've created these resources for you. Our goal is to be a one-stop shop for all things investment. We teach you how to, again, day trade, swing trade, invest. The only thing we don't have yet, and I say yet because this would be the easiest course to create, is a options trading course. How to do it. Our indicators are still the same, right? Our indicators give you that directional bias. So if you're options trading is pretty much just talking about where the market could be. You're buying insurance policies on whether or not the market's going to drop or it's going to go up. Anyways, we got 6 minutes before the spotlight range is fully formed. And nothing of interest as of yet. Sorry, I have an alarm that goes off as soon as we get close to the spotlight strategy. Just to make sure. Now the way this market is just sitting here, again, if we get another break here, it might take forever before it actually turns back around. Now here's the thing about the double break, actually, I should add. With the double break, it doesn't necessarily mean that that wasn't the manipulation move. All the double break means is it's going to take a while, and it's going to run probably majority of the PD arrays to the downside before it turns back around. And that could be later in the afternoon. So late afternoon, we could get or like even after 12 o'clock Eastern Standard, you could get a setup. But we're not interested that late, right? We're not sitting here watching that late. That's why I'm not looking for a sell here. Let's see if we get a third break here. Yeah, there's your third break. For anybody who went in short here, which again, I was not interested in. I don't like to see it, because when you do get this kind of price action, that just means that it's going to keep dropping and consolidating and dropping, and then might turn back around. You don't know where it's going to turn back around. There's no other PD arrays down here. We've cleaned them out. So why is it gesticulating this much? Just so you don't get in. Just so you don't get in for the buy. And that's why you want to avoid those double breaks, the double manipulation moves. Now, what's this tell us going into the spotlight strategy? We got 2 minutes before range formation. So what do we have here? What are we looking at? Well, we had a upside expansion model with New York now taking out Asia lows. We're well below the 238 EMA. You already had a crossover. We could get a bearish confirmation, pull back to the 20 EMA, which is most likely sitting right at, yeah, right near the golden zone now, and then look for a sell-off. But because we had a upside expansion model, and as mentioned before, and we have a bullish bias, we're bullish on the daily, the 4 hour, and the 1 hour, even though we're bearish on the 1, the 5, and the 15, I'm not interested in selling this market. But we already have a red box, 45 seconds left before this range is fully formed. We have a red box, and we could get that bearish confirmation. But we're most likely going to get a deep retracement right into this zone, and probably even to the blue zone. So once we get a bearish confirmation, what's that tell us? That means that there is a 80% chance that the other side of that range is not going to break. So if there's an 80% chance that the other side of that range is not going to break, then I can't safely take that buy, right? The probabilities are against me. How can I say I have a 75 or 70% chance of getting this accuracy right when there's between a 70 to 80% chance that that high can't be broken? That's where my TP sits, on the other side of that high, right? So if my high can't be hit, or if there's a low probability of my high being hit, then I'm not going to take a buy. And as mentioned before, I don't like to go against the grain, so I'm not looking for a sell. What's that do? That puts us at a stalemate. This is one of those days that I would not feel comfortable taking a trade. As mentioned before, day trading is not everyday trading. This is how you decide that. It's a simple, like, there are traders that feel a need to trade every single day, so they desperately look for a trade. That's not what trading should be. It should be all about probabilities. I've said it before, you can't feel bad if there's a 70% chance of you winning the lottery. You got to buy that ticket. But if it's 50-50, well, even then some people will try to buy that lottery ticket. But 50-50 chance where you could lose a lot of money, don't take that. That's gambling. And you're better off just walking into a casino and dropping $10,000 on black on the roulette wheel, right? That's 50-50. Actually, it's less than 50-50 because you have two double zeros in green. But our range is fully formed on the spotlight now. Never really gave us a buy setup. Now let's see what side that confirmation comes. Most likely we'll get a bearish confirmation. Bearish confirmation, retracement, and then a drop. But we're just here to do some ticker tape reading. Not interested in this market. Just jump back onto the spotlight for a second. So, as mentioned before, when you have a break, so once you have a confirmation, first of all, there's a 73% chance today. Actually, let's break this down. What is, sorry, today's Tuesday. So we're going to filter this data by days. So today is Tuesday. We're looking at the E-mini NASDAQ, New York session. So there is a 72.4% chance that once we get a confirmation, the other side of that range will not break. And then there's an 87.1% chance that we will retrace back into our range. That's why we wait for confirmation. As soon as that confirmation comes, our probabilities are increased to 72.4%. And then we wait for that retracement because there's an 87% chance that it's going to retrace back into our zone, allowing the market to come to us and not us chase the market. Touch that 20 EMA, touch a 5M fair value gap, and then we look for an extension. How far could we possibly extend? 2.7 standard deviations, but again, we're always looking for the low-hanging fruit. How deep could it retrace? Roughly between 0.3 and 0.2 standard deviations on the inside of the range. Remember, those are these numbers here. We have the standard deviations turned off here. Sorry, 1 second. I turn the standard deviations off during the morning just because then it becomes a little too noisy for me. But remember, there's inside the range and outside the range standard deviations. There's London's. So London gave us a bearish confirmation, gesticulated, came back into the range. We didn't break, or we did not break, so that high percentage chance that we were not going to break the range, and then it finally dropped. Obviously, this came late for anybody who was even trading the London range. This came right into the New York range, and then it dropped to 3.5 standard deviations in the long run. But that was overnight. Now, as soon as we get the confirmation, that's when the standard deviations show up. It's a dynamic indicator. Doesn't make anything, or doesn't clutter things up for you until it's ready. So when we have data on our side, 20 years of it, US 30, by the way, making another retracement, did not give us a confirmation yet. So let's go back. So when we have 20 years of data on our side, then it just depends on lining up those arrows as mentioned before, right? So if 72% chance, this is how I honestly avoid FOMO altogether. If there's a 72% chance that that range won't break, then, and my bias is bullish, right? So if I get that bearish confirmation, there's a 72% chance that that top will not break. But this was my TP. I wanted it to come all the way up here. And I was bullish. So I'm not interested. But for whatever reason, let's say we don't get that bearish confirmation and we get a bullish confirmation, then it falls back into alignment. Now there's 72% chance that the bottom will not be broken. Right? 72% chance the bottom will not be broken, and my bias was already bullish. Then it just has to fall within our time frame. We want to be in a high probability trade setup 1 hour after range formation. Range is formed at 10:30 Eastern Standard Time. By 11:30 Eastern Standard Time, if we're not in a trade, we call it for the day. And today just becomes one of those days where we don't trade. I was expecting this kind of price action again, coming out of a long weekend, Trump speech. Other than that, no real news. So I kind of had a feeling it was going to be this kind of a day. Kind of comparable to a Monday. Mondays don't always give us the best offerings. So if we paint out a 5M fair value gap, I'll outline it. If we get above this inverse fair value gap, then we'll keep an eye on it to see if we get a bullish confirmation. Because it's cleaned out everything down here already. You just have these equal relative highs. 1, 2, 3. Is there any more back here? The purple range? No. So all the equal relative highs are here. All the inefficiencies have been filled out, so it only makes sense for it to keep pushing up. So if we get a bullish confirmation, then it pushes things back in the direction of our bias. And that's how you use these two indicators together. One has all that aggregate behind it. The other one paints out very, very important, highly algorithmic zones that the market is drawn to. Use those together. So if the market is drawn to this blue zone, and we get a bullish confirmation, where do you think it's going? It's going right into that blue zone. And then eventually to take out these highs, I'm assuming. But if we get a bearish confirmation, it could still retrace deep, maybe wick that blue range and then push down. But the blue range is where it wants to go. It is drawn there. But no confirmation as of yet. We got a red box, and we're red on the 1, the 5, and the 15. So nothing about this is bullish yet. 19 minutes to 11. And while we're waiting, let's go check it out. Let's give you guys the user experience at least. So now I'm logged in. Now I have access to all these stories, all this news. DraftKings, this is a great one to check out. Especially, I think anybody who bets, does a lot of sports betting, they know that these companies are growing exponentially. They've introduced a lot of subscription-based models. Another area I'm obviously interested in is tech. Inside China's tech boom. And as mentioned before, not every category gets updated every single day. It depends on what the news is and what's coming out, but you'll find a brand new, at least one brand new article in one brand new, or sorry, in one sector every day, if not maybe two. There's a section that we are working on. We'll put it somewhere here where I want to update people when one of these has been updated, or maybe a star. Maybe a star will pop up just to let you know that the section or this sector has been updated and there's more news in that section. Because not every day will there be like something in, for example, cannabis. Is there anything under cannabis? Yeah, there's one article here under cannabis. But, you know, again, doesn't mean there's going to be something every single day, but, or under your specific category that you're interested in. But take a look at that. Take a look at the blogs, which are free. Still nothing here. Still waiting for confirmation. Now, if we get confirmation on one of our other assets, we'll jump in over there. Actually, did we get a confirmation? Sorry. While I was doing the market watch, I just want to see if GBP USD. Oops, wrong thing. Where's GBP USD? Yeah, we did get a confirmation on GBP. So GBP USD, remember, just set up your alerts across all of these different pairs, whatever you're interested in trading. So what do we have here? Let's quickly do some analysis. So we had an upside expansion model coming in from Asia, and then we dropped, same thing, took out all Asia lows, tapped the NWOG, and we got a bullish confirmation, most likely heading to the purple zone here. So I'd like to see it touch the 20 EMA. This is our fair value gap of interest currently. Let's take a Fibonacci from range low to range high. Remember, the indicator already paints out the 50% of that range for you. It's right there. No, it's close to this. That 50% is measured from the gray line here to the gray line here. So we're taking candle wicks right now. But that's usually where the market is drawn to it, at the very least. Usually these 20 EMAs are sitting near 50 of the range, but there's no other valid fair value gap in here. So we got confirmation. That's the only valid fair value gap. The 20 EMA slowly coming to meet us here. I'd like to see what it does there. And then if there's enough room for a buy, we'll take that into at least the end dog and then the purple zone. Remember, anytime you have these zones close together, obviously aim for the lowest one, but it could run all the way up into the next one as well. So GBP USD is the more interesting trade today. And you can set up alerts across like multiple assets, whatever it is that you like, depending on what plan you have with TradingView. But just right click, and add alert on Spotlight. And then it will give you an alert to your phone once a confirmation occurs. That way you're not missing any, you don't have to sift through all the pairs or whatever. You can just get an alert and then jump over. So here comes the market now. There's the 20 EMA. There's our fair value gap. Near 50%. That's where I'd like to see it come down to. And then see if it gives us an entry long. We're green across the board. Just going to check something here on a higher time frame. Okay. Drop back down to the 5. Yeah, I feel good about this one. GBP USD. Looking for a buy. Looking for it in this section. So we want to hit this fair value gap, touch the 20, and then we want to show signs that we're ready to go up. We want to start creating fair value gaps on a lower time frame. Remember, hit a fair value gap, create a fair value gap. This retracement could come all the way down to the 50 though, and the blue zone, so be prepared for that. That's why we want to see what it does when it gets here, not just jump in. And remember, the deeper it retraces, technically the better that is for us. It leaves us more room for growth. I'd rather it come all the way down to the blue zone and then aim for just the highs. Because the highs, you know it's going to break. Right? So if it comes all the way down here, there's a 1 to 3 from here all the way back up to the highs, as opposed to going further out of the range. Let's see what happens. Put 10 minutes till 11. Nah, it's not really giving us much of anything yet. No confirmation, just gesticulating, leaving no 5M fair value gaps. Just filled them all in right here. So the market did drop from there. I hate that trade, to be 100% honest with you. The double break. I don't like to ride the double break. As mentioned before, there's a low probability that as soon as you double break, it's going to take the first fair value gap that's created and run from it. I believe it was right here. Was it like a small one? Yeah, that small fair value gap that's created. So here's your double break. Then the market came back up, tapped that fair value gap, and started dropping. I don't like that trade. Not only is it against my bias, it could, like, just the fact that the market could retrace deeper before it drops. That's why I hate that. There's a low probability. GBP USD slowly making its way. I want to see it touch this fair value gap, touch this 20, and give us some sign. This fair value gap's already been tapped. So the only other area left is the blue zone. And then there's our New York fair value gap, which was also never tapped. This green one. That's why I think it could be a deeper retracement, but we'll see. Let's see what happens here first. So until it touches this fair value gap or this 20 EMA, not interested yet. Make sure you adjust your levels. You want to make sure they're perfect. Zoom in if you have to. The whole concept of Fibonacci math is accuracy. It does all the work for you, but you have to apply the Fibonacci tool properly. I've had in the past people tell me, hey, I missed my entry, or it didn't come into the 61%, it turned right around here. And then when they actually fix the Fibonacci tool, they see that it actually did touch 61%. Not that it has to, but I'm just saying every tool you can use to increase your confluence and your probability rate, use it. Use it properly. Another thing we're going to slowly start adding is a Discord where our users can talk amongst each other, share screenshots, their insights on our strategies. Remember, the goal is to make these strategies your own. Make your own rules to them. Maybe you're comfortable taking the risk there on the double break. Maybe, maybe you don't want to wait for certain things, certain points of confluence, even though we recommend it. At the end of the day, it's about what kind of trader you want to be. Here we go. We're coming into the 20, this 5M fair value gap and the 20 EMA right under it. This could be giving us our setup. Let's see. So I want to see a punch through, at least wick the 20. Come on down. Remember, it is drawn to that 20 magnetically. Okay. You can call that a tap, technically, because the EMA itself will shift. Now let's drop down to the 1M and see what kind of conditions it gives us. So on the 1M, what's happening? We're right at the 50 EMA. And we're right below the 238. Oh no, sorry, that's the red. That's the 20. There's the 238. So we want to see a 1M fair value gap being created here. For even more confluence, people wait for a 5M fair value gap to be created first, and then a 1M fair value gap to be created off that. You could, it's just this range is so small that by the time that happens, you might be all the way up here. I already have a bullish bias. Move all this over so it doesn't look all messy. Okay, so I want to see if this fair value gap stays open, this one that's been created. Remember, the indicator paints out the fair value gaps for you as well. It just kind of makes the green and red boxes around it so you know where it is. You can eyeball it, but then it's up to you to go in and actually drop in a box. So there you go. See, it closed that fair value gap. I'm not interested until it gives me an actual proper fair value gap. Until it does, it could drop a little lower. Now, as soon as it breaks this low, if it breaks this low, then I'm going to jump back onto the 5M time frame and see what it's giving us, or if it wants to retrace deeper. Excuse me. Oh, 4 minutes to 11. Right now, this is the highest probability setup. This is the only one I want to focus on. Remember, this is GBP USD, Great British Pound against the US dollar. You got to be comfortable trading all different kinds of assets if you're going to be a day trader. Find a Forex pair that you like. If you're allowed to trade Forex, depending on what country you're in. Find an indice that you're comfortable trading. I actually prefer NAS over US 30. There are people that love trading the S&P. So one Forex pair at least, because these will give you a setup on a daily basis. One indice, and then the rest of it, as remember I said, set up the alerts on your stocks that you're interested in. Let them come into your zone. Already while I've been trading, at least 2 of my stocks have come into their zone. I legally can't tell you what those are, but that was top-down market analysis that was done a week ago. It's not even something I do on a daily basis. You do it once a week on a Sunday, mark up all the stocks that you're interested in. As soon as they come into your zone, I already had buy orders set up that got filled. And all that information is right there in your market watch. But do your own due diligence. Do your own top-down market analysis. Find what sector you're interested in, what other information you're reading, what are the industry standards, what are the industry professionals saying, what are the analysts saying, how far could that stock go in 2025, etc. So here's another fair value gap attempt. About 32 seconds left. Let's see if this one stays open. Let me just check on the 5M. Yeah, 5M, we touched that. Now where's the 20 EMA? So the 20, yeah, technically. That's the other thing. It could either tap the 20 EMA, or when the 20 EMA, because it's obviously dynamic, always moving, it could just slide right under it after. Either way, that's a tap. Okay, there's our fair value gap that's been created. Now we want to tap that and create an engulfing candle. What's an engulfing candle? That means as soon as this candle closes, the next one, its candle body completely engulfs this candle body. So far we've had no tap. Hold on 1 second. Yeah, I want to see a touch. Drawing a little deeper than that. I don't even know if it actually touched. See what I mean though? You want to zoom in. I don't consider that a tap. Yeah, that's not a tap in my book. There you go. Tapped in. Now be patient. So this is a new candle. This candle didn't tap. So we tapped with this one. We want to wait till this candle closes. Depending on where we get in, let me just drop in our tool here. Remember, we're looking for a 1 to 3 RR. Right now our low is still down here though. That wick is our low. 1.51. So that candle closed. Now we want to see this next one engulf it though. Until then, I'm going to turn on my standard deviation. Sorry, they're off here as well. So one standard deviation is much higher. It takes us past previous day's high. So even previous day's high, we're just aiming for the low-hanging fruit today. Previous day high gives me a decent enough risk to reward. If we get the entry here, that one's worth taking a look at. So far, we're almost getting an engulfing candle. As soon as this one closes, that could be your entry. I wouldn't really call that an engulfing candle, so I'd wait. There's the 50 EMA. So now we're drawing in a little deeper. Remember, if you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. Just to show you how the strategy works. You want to practice this. You want to be proficient in it. So we're digging in much, much deeper. It doesn't mean that we've broken this zone yet. We could just wick, close here, 3 seconds, 2. Still want to see that engulfing candle. Till I see the next candle engulfing it, it could continue to drop. And then as soon as if we drop past this low, then we reset. "40 seconds left. Oh, it's getting exciting now. Remember, if this candle body closes well above this candle's body now, that would be a good indication that this thing wants to push up. That would be a true engulfing candle. But still waiting for it. 9 seconds. 7. So still closing inside that fair value gap. Still nothing to get excited about. I want to see a full engulfing candle. And then the probabilities go up. Doesn't mean that the market can't turn against you. Remember, nothing's 100%. But we're playing our probabilities. It could sit in this fair value gap for a minute. But it's still respecting it. Keeps wicking below it. Remember, at the very most, one candle can close below it, but then that next candle better shoot up back over it. Otherwise, we consider this fair value gap violated. Three seconds, 2, 1. Let me see what this next candle does. If it zooms back in, then this fair value gap is still valid. If it continues to push down, then we reset. What's a reset look like? We jump back onto the 5M. We wait for that deeper retracement then. This is the name of the game, guys. This is what trading high probability setups looks like. You're patient. You're surgical. Again, this is GBP USD we're looking at on the right-hand side. Here's NAS still giving us a whole bunch of nothing. No confirmation. 6 seconds left. Now this candle has to close well above this range for that to be an entry. So we dropped low, and then the next candle came back up. If we jump back over this zone is still valid. "21 seconds left. We have about 24 minutes left in our stream. We have 24 minutes to find a high probability trade setup. Otherwise, we're out of the markets for today. The early model gave us a whole bunch of nothing. And now it's all up to the spotlight indicator. There you go. That would be your entry. To go long. Move everything over here so you guys can even see it. Excuse me. My apologies. "17 seconds left. We want this fair value gap to stay open. 3, 2, 1. This increases our probability. Now again, it could tap it again. It could even wick. But we want to see some displacement happening from here now. Anybody who's been following us for a long time knows that if we stay in an area too long, just gesticulating, that's another reason we want to get out. Doesn't mean that the market won't go in our direction, just means that we don't want to sit there while they gesticulate back and forth, just manipulating. Because that means they're engineering new liquidity. Engineering new liquidity means that they're trying to set up buy orders and sell orders. They're trying to make people think that they're going to drop it from here and go up from here. Now we're back at that fair value gap. This inverse fair value gap and this fair value gap are pretty much aligned. So now it might do the same process as it just did over here. We want to see this fair value gap being respected and not violated. "27 seconds left. Remember, during the spotlight strategy, the way the probabilities are set up and the risk to reward is set up, you can comfortably take 2 trades. So if you do lose 1 trade and you see another trade set up at the blue zone, that's still good to go, as long as it falls within your time zone, or sorry, our time frame. Because our risk to reward is 1 to 3. So even if you have 1 loss and then you have 1 win, now you're still up 1%. "33 seconds left. So our low is right down here for now. Our stop. And then as soon as we clear 2R, as soon as we clear this top, we'll move that to break even. Or actually, sorry, we'll bring it to this low. And then as soon as we hit 2R, we'll take it to break even. 5 seconds. We're still at that 50 EMA. That's right under us. Ideally, we want to see some displacement happening, some big fast-moving candles now. We don't want to just sit here. The longer we sit here, the worse the probabilities become. Nas on the left, again, still a whole bunch of nothing. Seems to have stalled right there at that inverse fair value gap. Excuse me. Still swiping, still in that same fair value gap. 5 seconds, 4, 2, 1. I personally don't like to see more than 3 candles, 3 5M candles in the same zone. So that's 15 minutes. If I'm still in the same zone after 15 minutes, I'd rather get out. There's too much manipulation happening there. They're stalling the market. They don't want you to, or they're trying to shake you off. If they're trying to shake you off that hard, then it's better to just step out, especially at break even. But let's see what happens here. So we had one candle close below the fair value gap. "33 seconds left on this next candle. About 17 minutes left in our stream. Ideally, I'd like to see this push happen in the next 5 minutes. Taking a deeper swipe. Taking out these lows now. So our low is 2 ticks under there. We bounced off this fair value gap. Let's hope it sticks. "20 seconds. Let's see if this is the displacement candle we've been waiting for. "10 seconds. Now ideally we want to see this fair value gap stay open, but we'll see what it gives us. So remember, our goal is to be in a high probability trade setup 1 hour after the range formation, but then we want to be out completely by noon, no later than noon. Another algorithm takes over the market, which is very chaotic, and it's not something we want to be in. The lunch hour is a whole different beast. And there are people that trade it. Like there's actually one strategy we have that specifically utilizes the lunch hour, but again, probabilities are a little lower. So it's one of the reasons we haven't actually put it on the Learning Hub. I'm not sure if that's something. We don't want to teach you guys low probability setups. There's no point. There are other platforms that teach you anything and everything and throw the kitchen sink at you, and they have over 1,000 videos. That's not what I want to do. I'm not trying to teach you everything that everybody believes about trading. Our goal is to teach you high probability setups. So we left this fair value gap open. Now we're coming back into it. Let's see what happens here. About 13 minutes left. This Fibonacci is so big and obnoxious here. Let me decrease the size of it. Now we're back here at the same fair value gap. I'm going to jump up to the 5M for a second here. So look at this. We have 1, 2, 3 candles that formed, and that's just my own personal rule. As mentioned before, after 15 minutes, if I'm still sitting in the same range, I'd rather break even and get out. So this is now, and now it breaks down into your own personal rules. If you're comfortable with the risk, then you're still sitting in it. Otherwise, as soon as it clears here, there's an opportunity to just break even and get out. The probabilities haven't decreased too much, but it did drop. So when you have 3 candles, 3 5M candles sitting in the same fair value gap, then your probabilities drop from 70 down to 65. That's still higher than 50-50, but for me, I'd rather have 70 and higher. So we'll see. We'll give it a minute. Still gesticulating there. Taking its sweet time. So if this candle closes in green, I'd most likely exit this position at break even. That's just my own personal rules. I don't like sitting in slop. Look at this, all this gesticulation. There's nothing here. It just wants to sit there. Back at that fair value gap. Next candle that comes back up here, I personally would exit the position. I don't like this. There should be a displacement. The longer they sit in a fair value gap, that's just more opportunity for them to manipulate it. And I've said it before, I don't want to be a part of any heavily manipulated, some manipulation you expect, but a heavily manipulated zone, you don't want to be a part of it. It's going to take longer for it to move, and it's going to waste a whole bunch of your time. It's like going to the DMV. Would you rather go in the morning where there's no lineup, or would you go right during peak hours? You know, it's like, this is comparable to being stuck in traffic. Doesn't mean you won't get to your destination, just means, are you willing to wait that long? And that would be the break-even point right there. We still got 7 minutes left, so I'll watch it, and I'm comfortable. I don't mind seeing it run away. That's what my rules are for. You're not going to waste my time. I've already entered 2 positions as far as swing trading. This would have just been the icing on the cake for me. I'll most likely push from here, but again, 5, 10, 15, just my own personal rule. And people have asked me at times, like, what does that break down to? Is that ego, integrity? What is that? Where you're confident that it's going to go in a direction, but you don't want to be a part of it just because it doesn't conform with your rules. No, that's what the rules are for. Because what if this was a day where it was going to turn on me? Right? As mentioned before, the probabilities drop from 70 to 65%. The second it sits in a fair value gap too long. I don't like 65%, I like 70. That's not ego. That's just a rule. This is not buying and selling pressure. This is them engineering new liquidity. People going short here, people going long here. I don't want to be stuck in traffic. I hate traffic hour. I try to set up my day specifically to avoid traffic, every kind of traffic. I'll leave early, I'll leave late, just don't want to be stuck in traffic. About 5 minutes left in our stream. Just so people know where that 2R would have been. Most likely would have falling right near NWOG, or sorry, the NDOG. So just to recap for people joining us new, we have updated the indicator. Now it paints out the new day opening gap, the NDOG, and the new week opening gap, the NWOG. Those are also highly algorithmic zones that the market is drawn to and wants to fill in. The NDOG, it wants to fill in on daily, so these only last for the day, and then they re-up, they change every day, depending on previous day close, current day open. And then the NWOG lasts the entire week and is a zone that the market will come back and tap into many times during the week. About 3 minutes left in our stream. Just 1 second here. So there's our purple zone. That's what's taking so long. We're gesticulating off the purple zone. Remember, this is a very highly algorithmic zone as well. There you go. There's your displacement candle, the one we were waiting for so long. But it's still at the purple zone. It's got to get on the other side of that purple zone and then continue to push. About 2 minutes left in our stream. There it goes. Just took too long to give it to us. I got bored of it. A minute left. Please make sure you hit the subscribe button, turn on your notifications so you know when we're live. Depending on market conditions, we'll either be live at New York Open or after the dust clears at 10:30 Eastern Standard Time. So check your economic calendar to know if there's going to be heavy news days. Those are the ones that we will avoid in the morning. Again, I'm sure we'll gesticulate here. We're still at the purple zone, so it might even do one more drop. It looks like it's creating fair value gaps, slowly filling them in, sticking around, then moving up. And again, that's just an annoying way of trading. So we'll call it there. See you guys tomorrow. And actually, let me just quickly check what's on the economic calendar for tomorrow. So tomorrow's FOMC meeting minutes. That's later in the afternoon. So we'll still be on. We'll be on around. We'll try to be on tomorrow for New York Open, actually. Just a heads up. All right, have a great rest of the day. We'll see you guys tomorrow. Take care.